All right, so let's talk about what's happening here on the markets, because it looks like the bottom is behind us now.
I think it's a little early to say that. Basically, what we've been looking at for the last 2 months is that the U.S. market, the S&P, has been trading in a range-bound fashion between 1,100 and 1,220. We're in the middle of that range right now. The sentiment is better because European leaders have actually admitted there's a fire that needs to be controlled. Up until 2 weeks ago, they were actually kind of denying the fact that the fire existed or that it could spread to the rest of the system. So they still have yet to tell us how they're going to put it out, and let alone start putting it out, but at least it's a huge step forward to say that for them to say that there actually is something that needs to be taken care of.
Yeah, that's right. We have, of course, Jean-Claude Trichet presiding over his last ECB interest rate meeting as ECB president, and he came out with a gift in terms of reintroducing these year-long loans for banks and also resuming these covered bond purchases. And then you also heard from the U.S. Treasury Secretary Tim Geithner saying there's absolutely no way that we're going to see another Lehman's event or Lehman collapse like we did in 2008.
Yeah, I think it's highly unlikely that we're going to. We've always thought that the U.S. banking system is actually in quite good stead. They're not nearly as levered as they were going into 2008. But, the reality is that if Europe completely implodes, the U.S. banking system is going to take a hit. We don't think that's likely, but I just say there's no chance, I think, is probably overstating a little bit. There is a small chance. We don't think it's meaningful, but it is something that you can't dismiss completely.
Okay, so is this all culminating then in a big last quarter rally into the year's end?
Yeah, maybe. The thing that you need to see from Europe is not only the willingness to say they're going to actually address the problem, but they actually need to start addressing the problem from a fiscal standpoint. Trichet, I think, has been actually quite ambitious in the last 2 months. Beginning in the third week of July, he's really separated himself from the other policymakers in understanding that the ECB was the only single organization that could act unilaterally to actually shore up the system. He needs help. The ECB needs help. The leaders in Europe have said they're going to help, but we need to actually see the plan and see them start implementing the plan before I think everybody can really begin to feel like, maybe the bottom is behind us.
Okay, so you still have a little bit of doubt there, Eric, and maybe a bit of caution. How should investors be playing this market?
Well, we're long-term investors. We think that you have an investment plan. If you're a 60-40 investor, you have a plan to be 60-40, and you really have that plan for times like this. We've got a very volatile market, heavily driven by sentiment. You've got a lot of potential things that can go wrong, although they're not as likely as things actually beginning to work out in a very grinding fashion. I think stick to your plan. The safe assets out there that everybody talks about are actually quite expensive on a relative valuation standpoint, and really will only get seriously paid if bad things get worse or substantially worse for a long period of time. I'd stay the course, stay in the strategy that you had coming in.
Okay, so if some of the defensive cautionary plays are a bit expensive in your view, what's cheap? Where's value?
Equities are a buying opportunity. I think for us it's a matter of time frame. If your time horizon is 5 years, equities, we believe strongly that this is a buying opportunity. I think if your time horizon is 12 to 18 months, equities are a good buy. I think the challenge becomes with the volatility being created by Europe, we're still going to probably see more ups and downs, some pretty dramatic ups and downs. And if those ups and downs are going to actually erode your commitment to equities, then I think you should really consider, are you really an equity investor? Do you really have a sufficient time frame? An investor rather than a trader.